You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
We're advancing this deposit with the mindset of a major mining company or a large strategic counterparty that would ultimately have interest to buy nickel from a robust project or a robust operation. And that approach was really kind of borne out, like I say, by that positive feedback. We truly are developing this project in a way that meets the standards of multiple very large, sophisticated counterparties. So the asset quality is there, and the more important, I think, or just as important, is sort of the technical capabilities that we bring to bear on it are also kind of meeting that very stringent test under due diligence.
Welcome back to Mining Stock Education. I'm your host, Bill Powers, touching base with Martin Turenne, President, CEO, and Director of FPX Nickel, one of our sponsors. Martin, welcome back onto the show, and congratulations. You're bringing another $12 million into the Treasury via a strategic investor for 9.95% of your company, which you're giving in exchange for that $12 million. Break down what this means for FPX, please.
Thanks, Bill. Yeah, it's a big milestone for us for sure, a big day. You know, this really allows us to be fully funded now through 2023 and 2024 to deliver a preliminary feasibility study on our flagship Baptiste Nickel deposit and continue all of our environmental baseline studies to ultimately getting to the point of getting in the permitting process here in years to come. It comes as a result really of a fairly fulsome process of discussion with several different counterparties. They're a bit of a competitive process where we were, discussing commercial terms with a variety of groups for this type of investment. It's a very plain vanilla investment. It's simply an equity investment. Does not give the investor any rights at the project level. And at 9.9%, they're basically a shareholder like any other shareholder. But in my view, it's particularly gratifying having come as a result of a robust due diligence process that has, included many different groups, and the conclusions of those processes from all those counterparties was uniformly very positive. And so we see this all as a tremendous validation of our project, of our approach to developing it, and like I say, it allows us to really avoid the equity capital markets. It's at a significant premium, about a 27% premium to our last closed share price. And so the huge validation and really allows us to focus on getting work done and like I say, sort of avoiding these capital markets that have obviously been quite challenging. And
you did it at what percent increase to your share price or premium to your share price?
About a 27% premium to our last closed share price. So very significant, so at 50 cents Canadian, and even post announcement, we're still trading well below that. So an opportunity here for people to look at the stock at a level significantly lower than what this large strategic investor has chosen to invest in.
Martin, so when I call CEOs for a potential investment, one of the things I've been asking more the last couple of years is what third parties have looked at what you have and what is their opinion. And so what you're saying here with this vetting process is that someone more technical than any retail investor that's listening to us chat here looked at your project and they liked what they saw.
Yeah, and in not just one group, multiple groups, which is important, right? So you've got fairly consistent outcomes from those due diligence processes, which, lends, I think, a lot of credibility and credence to the work that we've done. We've always said that in how we operate the project, how we advance it, in terms of our technical approach and mindset, we're advancing this deposit with the mindset of a major mining company or a large strategic counterparty that would ultimately have interest to buy nickel from a robust project or a robust operation. And that approach was really kind of borne out, like I say, by that positive feedback. We truly are developing this project in a way that meets the standards of multiple very large, sophisticated counterparties. So the asset quality is there, and the more important, I think, or just as important, is sort of the technical capabilities that we bring to bear on it are also kind of meeting that very stringent test under due diligence.
So I could ask you questions about the profile of the strategic investor, but I'm assuming you can't tell me. So if I would say, does he own a large social media company? You couldn't give me an answer to that. Or is it a battery maker? Is it a diversified miner? Is it an EV producer? The answer would be, Bill, I can't tell you right now.
That is the answer. Yeah, certainly under our confidentiality provisions in our agreement with this investor. We're in an interesting time in the mining industry where, you think about it, there are, in the whole transition to electrification and particularly to electric vehicles, there are four industrial players in that, broadly speaking. There are mining companies, there are chemical companies, there are battery companies, and there are car companies. And each of those are sort of distinct industrial groups with many players, obviously. Now, each of those four groups are going to be very involved in delivering nickel and other raw materials into that supply chain. And there's a real sort of scramble underway around assets and how players within each of those industrial categories are going to position into this. So, we've been talking a lot with major mining companies, but we've also been talking with a variety of downstream players. And, we certainly see a world in which, going forward, assets like FPX's will likely be developed as a collaboration between multiple parties within that supply chain.
This investor, are they going to be advising you at all? You mentioned they're just a common shareholder, but is there a relationship there to where they might advise you as you advance into the pre-feasibility stage?
There's certain areas, let's say, of technical experience and expertise where we will have an open dialogue and a good relationship that we think would benefit both parties to make sure this project is advanced and is, designed in such a way and it's producing the appropriate products that would feed into that supply chain.
Okay. So your Treasury, where are we at now with the Treasury and how far will that take you?
Yeah, so current Treasury is around 18.5 million Canadian. So that takes us through the completion of a preliminary feasibility study and all the work that goes into that, metallurgical work, the engineering work, additional field investigations, et cetera. So that PFS would be planned to be completed in the market by the latter part of the third quarter of next year. So think kind of September type frame. And it would then fund us as we begin on the initial steps towards a feasibility study in the months thereafter. So, we're fully funded well into 2024 on the back of this. And again, in these market conditions, that's a great place to be.
Martin, when we chatted a couple of months ago, you mentioned how the Inflation Reduction Act was a positive thing for your company that can supply the much needed nickel into the markets here in the States. And now, since we talked, we heard about the Department of Defense in the United States possibly helping out Canadian miners. Does this impact you?
Yeah, it well could. So there's something called the Defense Production Act, which is basically a sleeve of funding that is managed by the U.S. Department of Defense around defense-related issues. And what's interesting is that the critical materials supply chain for electrification is now being couched in the context of an energy security issue, and thus the involvement, I think, of the Department of Defense in this conversation. So they've got this $750 million sleeve of funding, and they are looking to co-fund feasibility studies with project operators who have critical minerals projects that are located in the United States, but also for projects that are located in Canada and Australia, both of whom are free trade allies of the States. And so from a U.S. defense standpoint, Canada and Australian projects are now being viewed as domestic. And, there's a couple different requirements beyond the jurisdictional requirements. This is funding that's for feasibility studies, so it's not something for PEAs or PFSs. So that's something we will be able to sort of tick that box in 2023 on completion of the PFS as we move into the feasibility study. There's also requirements on ensuring that the material that you would supply from these critical minerals projects serve to benefit and to be used in the US EV battery industry. And that's another box that we can clearly tick as well. So hard to be definitive as to whether we'll be able to access that funding or not. But, in our understanding, it's a large pool of money. It's non-dilutive grants. So it would be an ideal sort of way for us to think about the funding of that feasibility study going forward. we've had initial discussions with the DoD on this, and we'll continue to have discussions in the months to come, and hopefully that comes to a productive outcome. But it's been a great process so far.
So am I correct in saying that this creates another buyer and potentially more demand for when you do want to sell the Baptiste project?
What it does is it a couple things. First of all, because the way the funding is going to work, it's non-dilutive, so it's a very cheap cost. It's a zero cost of capital, right? So it serves to reduce and lower generally our cost of capital to advance the project. That's going to minimize dilution. That should be very supportive of the share price. Free money is good money for sure. And it also highlights the strategic importance of having a critical minerals project in Canada or the States or in Australia. And that's something that I don't think the market is really well attuned to, how fundamentally critical that is to downstream off-takers and users of these metal products, that going forward, in order to be eligible for the EV subsidies, these materials are going to have to come from friendly countries, having a low carbon profile, being from quote unquote domestic sources. These are significant strategic differentiators for projects like FPX's. And I don't think that the true value of that is yet reflected in our valuation, or frankly, the valuation of other companies developing projects in these friendly jurisdictions. And the puck is heading in that direction. I think the investment thesis on this to favor Canadian and Australian companies and projects is obvious. The opportunity for investors, I think, now is to look at that very seriously and sort of move to where that puck is going ahead of the crowd, so to speak.
On the valuation of your company, a little over 4 years ago, you and I sat face to face for the first time in Toronto at Mines and Money. Your market cap then was $9 million. You told me you were undervalued. Now your market cap is $90 million. And how do you see that valuation?
Yeah, I mean, without wanting to be disingenuous, because it isn't. In a lot of ways, I think we're cheaper now than we were then relative to our fundamental value. Since that time, you've had the nickel price has sort of tripled, right? And so usually you would see that would have even a more leveraged impact on the share price of any company in that particular commodity. That just tends to be how the leverage works with these types of companies. We're basically in some way all call options on the underlying commodity. But more important than that has been the de-risking that we've done of the project, the advancement of the project. When you and I first met, we had a public study out in the market that suggested we needed a nickel price of $10 to $12 a pound for the project to be robust and economic. And the study that we did in 2020, which was a result of many years of improving the project through drilling and metallurgical test work, shows this project is very robust and has a high return profile at a nickel price of $7 to $8 a pound. So we've significantly de-risked, advanced, and improved the economics of the project. So that, combined with the nickel price move, and to say nothing of the strategic importance of sort of being low carbon in a friendly jurisdiction, these things are all going to matter more and more in years to come. Yes, we trade at a higher market cap than we did several years ago, but we still trade at a fraction of what our project value, our multiple on a NAV basis. We trade at about a 0.05, and typically you would expect projects like this, when they are taken out, to trade at least at a 10 times multiple on a NAV value basis from where we stand today.
You mentioned the carbon movement. You have a subsidiary company, CO2 Lock. What advancements have you made with that company since we last spoke?
Yeah, so FPX founded a subsidiary. We control about 80% of that subsidiary called CO2 Lock. Earlier this year, that company's focused on opportunities for a large-scale, low-cost carbon sequestration in favorable geological settings. So as an alternative to planting a bunch of trees to sequester CO2, you can react CO2 with favorable host rocks. And we think this is going to be a transformational way for the planet to reduce its carbon emissions going forward. And that's what CO2 Lock is focused on. We've recently hired a CTO who has long experience in carbon sequestration in geological settings. We also have, the company has acquired its own mineral tenure at projects in BC. And based on first pass exploration earlier this year, some very promising results for hosting a high grade of the rock type and of the mineral, brucite specifically, that is the key mineral that sequesters CO2. So we're advancing on the technology aspect and the engineering opportunities to maximize the rate of sequestration or the reaction between CO2 and these rocks. And we're complementing that with actually securing mineral title to those rocks, both in BC and abroad going forward. So yeah, a lot going on there. Very positive discussions with large carbon emitters who are looking to solve their carbon, emission issues, as well as various levels of government, all of which could lend significant financial support to that company.
What about the Van target? We did some drilling there this year. When to expect those results?
Yeah, so Van was a new discovery, major new nickel discovery we made in 2021, which is located just a few miles away from our main flagship Baptiste deposit. We did step out drilling there this past summer of 2022. We're awaiting those first results imminently here, probably within the next week or two. We'll have the first batch of results on the basis of a fairly aggressive step out program. The hypothesis there is that Van could ultimately be a larger and or higher grade deposit than Baptiste, and we're excited to be able to share those first results to the market very soon.
And last year, I considered that one of the discoveries that got no love from the market too. So when people look at FPX, there's a discovery there that's not seeing much value, in my opinion. But finally, to your flagship project, the Baptiste project, since we last spoke, you updated your mineral resource estimate. What did we accomplish here?
Yeah, a couple things. One, we saw a significant increase in the what we call the Davis tube recoverable or DTR nickel grade. That's the fraction of nickel that can be recovered using magnetic separation. A very simple process of separation. So head grade increase of 6 to 7% vis-a-vis what was in the previous resource estimate. So that's very significant for a big bulk tonnage project like this. Adding even 1% of additional grade is great, but 6 to 7% higher is very, very meaningful and should translate to very positive economics. We've also reported the byproduct credit grades for things like cobalt and iron. These are byproduct credits, byproduct streams that we think we can potentially crystallize in the pre-feasibility study. Those were not byproducts that were included in the previous study, and so that's potential upside on the economics of the project, which we would hope to incorporate within that PFS next year.
Okay. And so catalyst coming forward then, the next one would be the Van drilling results. Is that the next catalyst investors should look for?
Yeah, Van drilling results here in the next couple of weeks. And then as we get into the early part of 2023, the thing I'm most excited about is the results of the pilot plant that we're running. So this is, pilot scale demonstration of the flow sheet to recover nickel into a very, very high grade concentrate. This, in some ways, is going to be the most important news release from a technical standpoint in the company's history to really conclusively demonstrate that we can recover this nickel, high recoveries, simple process into a very high value product, and that our nickel deposit has huge sort of metallurgical advantages over more traditional sulfide and laterite deposits.
All right. To learn more about the company, go to FPXNickel.com. You can also reach out to Martin. He's very straightforward and responsive. As he told me, although he's a sponsor, Bill, ask me whatever you want because there's not a question I won't answer you straightforwardly. So Martin will get back to you. Reach out to him. If you want to find the stock chart, it's FPX on the Venture Exchange in Toronto and FPOCF in the States. Martin, thank you for this update.
Thanks, Bill.